how can you make the most in this crypto market during 2024? Understanding the right data set. If you do look at this, you're confused. You're like, no, the market is going down. Fear is through the roof. What are you talking about? You're watching assets like XRP breaking to the downside from its trend line. You're watching assets like Ether breaking to the downside, retesting and getting rejected. So you're like, whoa, that's negative. If you are confused without getting that detail before you make a right decision, you should be watching this video till the end. We'll make this quick and follow each and every critical points. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. We've been going through breaking down each of these assets one by one so that you know which of these assets look like an opportunity and which of them are showing you a red flag so you can step aside from there. Now, the fear and greed index give you an idea that fear is here. Sure. Just last week, it was greed. You have to keep this in mind. And when people give you the idea about fear and greed index, keep one idea close to you. At the top of the last market, 2021 May, June, that time, where the peak was kind of near the April, May for most assets, you are not watching fear through the roof. You're watching the greed reaching a point and then starting to drop the price. Only few assets went up during that time. Understand that. Then the fear started coming into the market. Fear got like everywhere in the market, and that's where the market made the top. So think about that. Where are you right now? Are you at the top with higher greed? Or are you at the bottom with very high fear? Because last time, those who made the gains, they made the gains while the market was in fear. That's exactly what the altcoin index shows you. On a daily correct view, which is like you're just looking at what's happening right now, it shows you Bitcoin is stealing the show. It shows you Bitcoin is stealing the liquidity. But the moment you zoom a little bit out at medium-term outlook, it shows you, yeah, altcoin is still trending higher. It's trying to go back up. You're still inside this range. It's a small range. Now you go on to the macro, the yearly one. This is where your eyes should be. You're still above this Bitcoins here. That's over. And you have watched how the price action has played out in the history. So you go up, then you ride. You enter this zone. That's where you see crypto market doing something, especially on the altcoin side. Last time when you saw 45, 46 here in the index, you saw the entire market bursting. Now, you're making a higher high, lower low. That's a consolidative phase where the market is choppy. After which you hit the trend line and then bounce off. So if you are looking at the right points, then you're like, okay, let me look at the dollar first. Is the dollar about to ride further higher? Dollar moving back to the upside in the recent days pushed assets like XRP, Bitcoin, Ether, and others to the downside. So if dollar is to get rejected at this point, that would highlight the fact that the momentum to the downside in dollar is increasing. This is your trend line, initial trend line. Now you're not reaching there. If you get rejected here, you are increasing the momentum to the downside. That's great for any assets that's trading against dollar. Whether that's gold, whether that's your stocks, whether that's your crypto, it's all going to gain value. Now, you zoom a little bit out. You go on a 3-day chart. You're like, okay, what are we really observing here? You had a key level of support. That's where the dollar is now bouncing. This bounce is after breaking one trend line. So what can be the retest zone? Retest zone is 103. Now you step back on a weekly chart and you're like, fine, we are at a support range. We are bouncing. The only rejection point which we would like to see is here at 102.5. If the price comes there and get rejected, it's great. If the price gets rejected here itself, that's perfect. But when you do watch dollar, keep an eye on 100.5. If the rejection here push the price down to this point and consolidate, it can break further to the upside to test this trend line. That would be 102.5. That is going to be the next range. While this plays to the downside, you're going to see some relief, a retest most likely. While this 102 is playing out, in Bitcoin side of the equation, you would watch this range break. And then we retest this range. That is going to be the case if dollar goes back to that side. Now, say you look at the macro picture. You're looking at how the market is playing out and how you can actually use that for your advantage. So while you're on a macro, you're still looking at these trend lines. There is nothing which says the trend is changing. You're still here. You just watched how the 3-day candle closed. Everything is playing out. The weekly candle close that argued that the negativeness is still here shows you that the direction is not yet changed. You need to make a bottom and a reversal sign. Say, for example, you get a bullish divergence on a weekly, on a 3-day. That's going to be accurate here. But then you understand the fact that Ether is still going down. It is in a rectangular pattern after breaking to the downside. So what shows Ether can go up right now? Nothing. It is showing the fact that Ether, unless it breaks this 2800, it's still going to the downside. The next level of support, as we argued in yesterday's video, remains here. While the market is choppy and while the market is going down, don't miss this point. Whales will be coming back into the market to buy at this level. That is 2200 to 2150 in Ether. That's the long-term trend line in Ether. So you zoom out and ask the same question, okay, where would I look for XRP in that sense? Because your trend line starts all the way back from 2022. Now you extend that till where we are now and you observe the fact, okay, if we come down, we can come down to 0.46. So the trend lines are arguing the point that the price is getting rejected at the resistance. You can definitely look for 0.49 towards 0.47, 0.46. This is going to be an optimum range. But you don't want to try picking the 0.46 as a bottom. Rather, you would like to start buying from 0.49, 0.47. That is going to be the range, because what if the price bounces back at 0.465 and your order is at 0.46? So split that into 3 or 4 different orders if you're trying to buy this asset at the lower end. Now, you go on a 3-day chart, you see that the price is trying to breach the moving average. Trouble is, you saw some of these times, whenever you breach that, the momentum to the downside is like this. It's very volatile. There are times, yeah, for sure, where you're slow. But look at that one candle. That was heavily volatile. So what is going to be the news if we should be this volatile? I really don't know what the news is going to be. But the idea of this candle is scary. Whenever you break that moving average to the downside, you can see there was exceptional amount of volatility, whether that's a micro volatility, whether that's a bigger, whether that's a macro volatility. So you do look at these points and argue, okay, what should be that drop? One point says that can be 37% to the downside. Another one says it's 11%. Another one says it's 30%. So you're like, okay, the average is somewhat close to 20%. Now, look for 30% itself because the price action can do all of these stupid things. So if you take it similarly from all these local tops, your 30% drop would come close to 0.43. Remember the macro trend line support which we just talked about? That comes close to that point. This is what you should be looking at if you are a macro buyer, a net buyer on this asset. Say that's a point if XRP is about to reach 0.43, just like we did in early August. That means Ether is about to revisit 2000. Bitcoin is about to revisit 49,000. So your support levels should be watched pretty closely because you know the trend line, the macro trend line remains here. So if you are to look for more buying opportunities, then you're waiting for the price to come back down to 48, 49. So your trend lines here are positioned well enough, whether that's your short-term trend line or your macro trend line. As you can see, this is Bitcoin on a macro chart looking at last couple of years. And it gives you a certain point that, okay, watch. We are breaking the moving average. We got rejected with the most recent candle close. Instead of going back up, we're coming back down. So the only hope which you have is to look at a short-term chart to see if you can get a bounce. Otherwise, the pattern or the price structure which you saw will be invalidated. Now, what is that? You go on a 4-hour or a 12-hour chart. The price action kind of gives you the idea there is a possibility that the price can do this. We saw this last time. So if the price breaks that trend line, so where should it go? 62. Where are we now? 57. So your basic idea is to watch for a bounce at where we are now, 57,000. If you don't get a bounce from 57,000, most likely you're going below 55. That's your next wick low. So if Bitcoin is about to do that, that means most of us should be watching for these lows. These are the regions where you buy. If you want to buy, say, $10,000, you put 2,500 here and watch for a bounce. If it doesn't bounce, you wait. You buy at the next level of support, not in between that, the major swing support. That's the demand zone where you should be keeping your eyes on. Now, if you're on the macro side of the equation and you're watching through a lot of these assets and you like these kind of charts at the right time, where we were arguing that Ether is weak and it should come down, where we were arguing that Bitcoin may actually drop back to the downside, join the SI family, use the link in the description below. Make sure as soon as this macro flips the micro, you are positioned well and you are in the right asset. This is what benefits you. Looking at the short term, if you are trading micro, yeah, it is important for you. The medium term to the long term is the perfect area to be in when the market is filled with fear. Don't miss that point. So guys, if you received value, smash that like button for me. I'll meet you guys on the next video. Bye for now.